This is not good.
I do not ever want to see a tight correlation between TLT and SPY. It's just not what you want. It is not a healthy market environment. And when I'm looking at what's going on between long-term treasury bonds and the S&P, I can see that a lot of these exaggerated moves on the SPY are directly correlated to what's going on in TLT. And a lot of it is extremely complex. So am I going to go into a high-level detail that's going to put all of you to sleep? No, I'm just going to say that if we see the market melt up with bonds, likely not a very good sign, all right? Especially if you're like just sitting on your 401k and you have a 60-40 portfolio where 60% is in equities, 40% is in bonds. You don't want to see both of those melting up at the same time. You might think that's good, but that's your hedge. Your hedge shouldn't be correlated with equities. You know, if something happens and they start correlating both to the downside, which is what they have been doing, you know, as the market melts down, TLT's also been melting down. I mean, those portfolio constructions, which keep in mind is a large majority of the population, are completely getting wrecked right now. And the performance in them doesn't make any sense whatsoever since the beginning of the market. And I don't think anyone's really paying attention to that. And I think it's a huge warning sign. And I don't know if it's a systemic change that's occurring because of the different mechanics in the bond market, likely playing to the amount of liquidity available there, or maybe it has something to do with Japan. I mean, there's so many different factors that really all I'm going to do is just spew guesses. And so I'm just going to try to make you aware of that rather than spending too much time speculating on things that probably aren't going to be right, because there's so many factors here that who can honestly say? Anyone trying to say that they know exactly what's going on right now, I feel like it's just full of it. So let me go ahead and take these off because the glare is aggressive. And let's try to make some sense of this market. For the past several weeks, I've been going over this Elliott wave analysis on the market. This allowed us to catch the bottom at 409, play it to the upside. It was extremely profitable. But right now, we're seeing that the market's trying to invalidate this charting. Now, we still haven't got an actual break. Now, there's two ways to look at this. Either a break above 443 invalidates this chart, or potentially, maybe it could go to 447 and then break this chart. But I do just want, real quick, do you want to pull up the chart that everyone's sharing across the social medias? People in the Discord have said, oh, but this trader is sharing this chart and they see SPY going to 480. Everyone's sharing this chart. Okay, look, this is chapter 1 of Elliott wave analysis, right? The fourth wave cannot retrace into the price action of the first wave. So even if this charting is wrong and the market is going higher and this gets invalidated, I'm still not going to tell you that this is right. Okay, this is Elliott wave basics. When we go to 409, it completely invalidated this. Okay, and before that, as I said earlier in the year, this already doesn't work because of the volume analysis, okay? And I'm not going to get into that because we've already gone over that. So right now, at this moment, when you're looking at where the market is, right now, I think the best way to handle this is to just wait. Just wait and let it play out. If we break above this 447, you've got another $30 to the upside that you can play. If it actually invalidates and we go to, you could probably play that all the way to a double top without too much risk, honestly. If we turn over, look how much room you have to the downside. Do you need to trade right now in this environment with insane risk? No, you can wait for the market to choose a direction and just play that. And additionally, I do want to say when it comes to the bulls, you should all be worried about this IWM movement right here. This has been extremely weak. You can see that the daily has finally kind of kicked to the upside. Let's see if that holds. But the breadth of the market is absolutely terrible. And it's starting to look like it did earlier this year before it completely fell apart like this, right? Before we started just completely breaking down. So I'd be really worried about the fact that, yeah, NVIDIA looks strong. It looks like it's trying to retest the highs to the year. I'd be really cautious about earnings on the 21st. I think that we've been getting a lot of rumors that earnings for NVIDIA may not be that great. That may be your catalyst that actually sends the market further to the downside. What causes this chart to actually play out is, the king of growth right here starts to turn over. I do want to say that even though we also have an inverse head and shoulders on Tesla, and it looks like the daily is improving, the weekly still looks really weak here. We're not even in a bullish RSI. So I think, another king of growth is showing signs that it's not looking so hot, even on smaller time frames like the 30-minute right here. We could see it's trying to reverse, it's trying to get some moves. By the way, this Friday trade was just so hard to get. I bought calls and ended up getting burned out here, and then they ended up playing out great. This whole move on Friday was, it's just wild to see some of the price actions that have occurred on this market. Because of that, I didn't move on this Friday trade. As this was moving up, I felt a bunch of FOMO, and that made me actually not want to chase. I felt myself kind of getting emotional. And when I feel that way, I don't really want to trade it. I don't feel like the stars have aligned. I don't think it really matches up with my thesis that I'm looking for. Last thing I want to do is emotionally trade, so I didn't move on that. One trade that I have open right now, and I think is an amazing opportunity, is this Disney trade. Disney looks so strong on the technicals. I know there's a bunch of fundamental issues. I know some of you watching this right now, you hate this company, you hate the management, you think they've made terrible decisions. We can even see that has affected some of their box office sales, such as the new Marvel movie that had all female characters, was completely politically driven, and because of that, it failed, right? And from a business sense, why would you ignore your demographic like that? 85% of your viewers are men. You made an all-female movie. They're not going to be able to see themselves in the heroes or see something to aspire to when it's all female characters, right? It's a terrible business decision. It's so stupid. Why would you ignore your very obvious demographics like that? But look at the technicals on this chart. Look at the weekly right here. This weekly wants to fire to the upside, just hit into the bullish RSI. It looks like we're getting a 5-wave development to the upside. This stock looks like you got an easy move to $100. Watch for some resistance at the 94 level right here. But this gap, you could probably play it to here, look for some resistance, maybe get some chop, and then we'll probably gap up into the $100 price range. So, this looks like a beautiful setup. I know it sold off on Friday. That I should have, in hindsight. I'm very sad I didn't go ahead and buy some more of my position into this and kind of average in, because the setup here looks so beautiful. And on Monday, this is probably what you're going to see me buy some more call contracts on. And even if the overall market is weak, this is historically a defensive stock. So, I'm going to play the chart here, play the technicals. You might feel a way about the fundamentals. That's fine. However you want to feel, but this looks really solid to me. Next stock I want to talk about is Celsius Energy Drinks. This was called out by Jonah Elliott, who's probably one of the best performing fund managers right now. We had him on the podcast. He mentioned this. He's actually the one that told me to do a bunch of research in FOR, which I did, which is how he caught this earnings, which is a great play, which, by the way, technicals are breaking down here. Need to take some more profits, likely close this position out, do a little mental reset there. But on Celsius, we have a stock split that's coming up. And what's been most interesting, because the technicals here are a mess, right? This stock back in 2020 was only a few bucks. Now it's 172. This is pretty much like a toddler. Technicals are going to be hard here for a stock that has this much volatility. But the stock splits historically very bullish, very high win rate if you're bullish into a stock split. So that's been interesting, and the option chain here has been really interesting. So this hasn't really been tradable until very recently, when the liquidity picked up a ton. And, you've been seeing me get some big wins on this stock for bullish calls, even though, the price action hasn't been really necessarily that bullish, right? So one of the things I'm doing, though, is I'm sniping these options, these spreads. Have really, this is not that bad of a spread for a stock like this right now. about a 30-cent difference between the bid and the ask. But this thing has been wild at times, being like 200 on the bid, 400 on the ask. If I try to snipe some contracts for 200 and then immediately can flip them back for 300, I'm getting a 50% return right there. So this is one of those ones where you can stare at this option chain and you can snipe these contracts, especially with all the volatility the stock has. This could become a money printing machine, especially as the liquidity. I mean, as you can see, tons of liquidity is pouring into the stock. Option buyers are trying to push this higher. And that's simply because of what a bullish event stock splits can be. And because earnings was good on this stock, we saw massive profit taking on this earnings. It scared a lot of people away. I actually came here on the bottom. That was the first big win, is riding this up. Some very solid returns. We've seen it kind of base since then. We could see that a double bottom has formed, but this stock's really having some trouble picking up. If you could see it kind of break through this range right here and actually hold, I think then you could truly become a lot more bullish. I'd also kind of keep an eye on the rest of the market and how the S&P is doing. Maybe if this charting that we had for SPY breaks down, we see the market pushing higher, then then Celsius might pick up a little bit better with the market. If things kind of break down, a growth stock like this, I'd be a little bit concerned about it. I will say though, if this plays out and we do see that this charting breakdown and Nvidia has good earnings, if Nvidia has good earnings, let's hope it doesn't just immediately gap up on earnings like it did here. If you get a move like this on Nvidia, it's probably going to spike to 600, maybe something like 580, and then you can play it to 600 is a potential. So, again, this looks bullish. Watch that option chain. There's probably going to be opportunities to snipe it. If the market looks bullish, this is going to be more bullish. But in that case, I would probably be looking more at Nvidia, who is the leader, right? So there's a lot of different could happen. Maybe here's how you want to react. But the theme right now is like play with super obvious, Disney, super obvious, and have a bunch of different case scenarios that you can hop to if things kind of fall apart. The other thing I want to talk about to end the report is going to be Bitcoin looks really bullish to me. This is my thesis right now for Bitcoin, is that we're likely going to go to 52,000 probably early on next year. And I think this will likely be driven by more ETF approvals and people loading those up, pushing this price higher. We played this 5-wave pattern in the past, and that was really good. So given this, I'm also going to be keeping an eye on Coinbase, which I've tried to do some charting. I will say this has been looking relatively strong. I bought some long-term calls due to my Bitcoin theory and analysis here. We can see the daily is looking really strong on Coin as well. So I would expect some tight correlation here. I also already have a big position in the Grayscale Bitcoin Trust, which is getting moved over to an ETF. I see a bit more upside there, although I've already been kind of taking some profits there as well. So that's what I'm seeing right now. Patience with the market, patience even on the Bitcoin rally. You keep in mind, I'm seeing a fourth wave, that pullback that will also come here. So if you're looking to kind of chase some of this upside, be looking for a potential pullback. We could see that pullback start to occur soon. The next baseline is going to be 42K. Okay, but then later on I see it going to 50. So I'm chasing this right now by playing Coin. Of course, I do have a position in Bitcoin as well. And that's going to be it for the weekly report. I think we're well over 10 minutes now. So hope you found that helpful. Hopefully you're not emotionally trading right now. It's okay to be patient. Just because you want to be a trader doesn't mean you have to trade every single day, okay? You can wait for the opportunities to come to you. Don't sculpt your ideas on the market. Be a surfer. Okay, bruh? Ride the waves.